Greetings and welcome to CIBER Focus, your source for international business information. My name is Jimmy Bettcher and our guest today is Andrew Ellul. Andrew is an associate professor of finance and the Fred T. Greene Distinguished Scholar here at the Kelley School of Business. He joined Kelley in 2001 after completing his PhD at the London School of Economics and Political Science. His research interests focus on empirical corporate finance, especially ownership structures and their impact on firms' decisions, institutional investors' trading behavior, and market microstructures. He has received awards for both teaching and research here. Andrew recently received a faculty grant from CIBER to help conduct research on accounting transparency, tax pressure, and access to finance. He joins us today to discuss this research. Andrew, welcome.
Thanks, and thanks for having me here.
Yeah, it's definitely a pleasure to have you with us today. First off, what's kind of what was the key questions that you sought to answer with your research?
The biggest question that we are trying to address in this research program, which is co-authored with my friends in Italy,
Okay.
Marco Pagano and Tullio Rappelli, who are at the University of Naples, Federico II in Italy, and Fausto Panunzi, who is at the Bocconi University in Milan in Italy, is the importance of corporate tax pressure on the transparency of financial information of firms. And by transparency, we mean the quantity and the quality of financial information that firms provide to the financial markets and to the tax authorities. One important aspect that the accounting literature has contributed to our knowledge with is that better transparency, better quality in terms of financial information leads firms to have one important advantage, that is better access to funding, better access to finance. And that has an important implication, being more investments. Now that is the benefit of transparency.
Sure.
The cost to the firm of transparency is that it also becomes more visible to the tax authorities, and therefore that means higher tax bills, and that also means lower ability to elude taxation by firms' shareholders. So what we want to analyze in this research project is this cost and benefit of transparency. And this is particularly important given that tax avoidance and tax evasion have become very important issues. The Treasury officials in the last 4 or 5 years have been saying that tax avoidance is one of the most important issues that the US economy is facing. And we are trying to contribute to this debate by looking at this cost and benefit, and this trade-off that firms face. And we do it not just for the United States, we do it in an international context where we have 2 samples, one with more than 35 countries, the other with more than 90 countries in it, and we find some interesting results.
Okay. Well, what are some of those key decision factors for a firm to decide where along that continuum between transparency and perhaps having more access to financial markets, but then also opening themselves up to potentially greater taxation, like versus, less access to capital, but less transparency and less taxation? Like, what are the key decisions that a company makes?
That's essentially a very important question, because those are the key components of our research. We are trying to understand on which point of this trade-off decision are certain firms with respect to others. So the first important aspect that we find is, both theoretically and also empirically, we find that firms that need more funding, and this funding has to come from external sources, that is from the financial markets, those firms tend to opt for more transparency, keeping constant, obviously, the corporate taxation. We also find that firms in countries with more sophisticated financial markets, they are more likely to provide more information and better quality information, that is more transparency. those are essentially the dynamics, the driving forces that lead you to increase your transparency. We also find, as I was alluding to in the first part, that the higher the corporate taxation, that is, the higher effective corporate taxation that firms have, the lower is the transparency. So essentially, a firm has to balance out these benefits and these costs, and every firm will decide where to stay on this trade-off by analyzing those two aspects.
Were the results fairly consistent across the globe, or at least in the more developed modern economies?
That is a very important question because it goes essentially to the heart of our empirical methodology. So let me explain very briefly.
Yeah, that'd be great.
Very briefly, we have two samples. Okay. One sample which is more of the developed or emerging markets, which are close to become developed markets. So we have countries like, obviously, the United Kingdom, Canada, Australia, but we also have countries like Thailand, Brazil, Taiwan, those that are essentially very close to being developed, or as the first group I alluded to, are developed countries.
Yeah.
The second sample we have is more than 90 countries, and there we have a broader mix of countries, those that are really developed, like United Kingdom, Italy, Germany, so on and so forth, and those that are emerging but very close to being called developed, as I said, like Thailand, Indonesia, so on and so forth. And those that are very much starting now to be called emerging markets, essentially, rather than frontier markets. So the results are fairly consistent throughout the two samples. One which is more sort of developed based, the other is more emerging market based. So the results are fairly robust. I want to mention though that an important distinction across the different countries is what accountants and tax researchers refer to as the textbook conformity. What is the textbook conformity is very crucial for our research. Certain countries like Italy and Germany and Spain and Brazil, a company there has to produce just one set of books, and that set of that information is the same that the financial markets will see, and the same information that the tax authority will see. In other countries, like the United States, like the United Kingdom, like Canada or Australia, a company can legally keep two sets of books, and our story is mostly our contribution. Our hypothesis is mostly, or if I want to be more precise, exclusively based on countries which are have tax book conformity, because that is where essentially the numbers that you give, the financial information that you give, the quantity and the quality, will be shared by both financial markets and the government, the tax authority specifically, and that is where you have this important contribution that we are trying to make to this debate.
Great. Well, what are some of the key implications of your findings then moving forward?
So one important implication is obviously on the tax dimension, that is the higher the effective corporate taxes that a firm face, that firms face, will essentially determine not just traditional firm decisions that we know about, like, for example, investments in a direct way. We know that taxes may influence investments in a direct way. The implication is that corporate taxation has also what we call a corporate governance dimension. That is, taxation in this context is having an important and the first order effect on decisions which are crucial, like the level of transparency that a firm decides. And obviously, that is not just important in itself, but it's important because the more transparency you have, the more accessible are financial markets for you, the better is access to funding, and that has an implication on investments. So effectively, if we are showing that investments, which at the moment are crucial for economic recovery and the stage of the business cycle at the moment, there may be a lot of dynamics that are taking place sort of behind the scenes and are being driven by these effective corporate rate taxation.
Kind of building on the implications, do you think that your research is more applicable towards corporations that are trying to consider transparency levels and corporate governance, or potentially more on the regulator side who are trying to determine appropriate tax policies or whatnot?
Well, I think without perhaps overextending the type of contribution that we would like to do, I think we have results that are useful. One, to understand corporate behavior, and that can be useful for managers. On the other hand, it's also useful for regulators and specifically, in this case, policymakers, because you know that a certain tax policy, a certain effective tax rate is going to have a first order effect on transparency, and from there you will have also an effect on important firm decisions like investments.
Great. Well, one last question, kind of building on kind of our whole entire conversation, like what recommendations would you have built off this research for trying to start aligning those interests between corporations, tax entities, and as well as the financial markets?
Well, it's very hard for me to give a one size fits all type of solution. Sure. It's impossible because, as I said, there are different dynamics. You'd have to consider which type of country you are looking at, whether it has that country has book tax conformity or not. You need to consider also the sophistication level of investors, research analysts, investment bankers, in order to understand the transparency. So it's impossible for me to give you type of solution that essentially makes that can fit every. The takeaway from here is that corporate taxation, effective corporate taxation, has first order impact on the corporate governance dimension of firms, and that should be taken into consideration both by shareholders and also by regulators and policymakers.
Great. Right. Well, Professor Ellul, thank you so much for joining us today. We really appreciated your insights.
Thanks a lot. Thanks for having me.
Great. Thank you for tuning in. If you have topics that you'd like to discuss in a future episode of Cyber Focus, please contact the Center for International Business Education and Research here at the Kelley School. Thanks.